Today, April 2nd, 2025, marks a pivotal moment in global trade dynamics as President Donald Trump announces the implementation of sweeping new tariffs. Branded as Liberation Day, these tariffs aim to impose a 25% levy on auto imports and targeted duties on goods from countries such as China, Canada, and Mexico. The administration asserts that these measures are designed to bolster American manufacturing and address perceived trade imbalances. However, economists and international leaders express concerns about potential repercussions, including increased consumer prices and strained diplomatic relations. The financial markets are already reacting to the uncertainty introduced by these tariffs. Investors are bracing for volatility, with stock indices experiencing fluctuations as they digest the potential impacts on corporate earnings and economic growth. The CBOE Volatility Index, often referred to as the fear gauge, has reached a 2-week high, reflecting heightened market anxiety. In this climate of economic uncertainty, attention turns to alternative assets, particularly cryptocurrencies like XRP. XRP is currently trading at $2.17, showing resilience amid the market turbulence. Bitcoin and Ethereum are also maintaining their positions, with Bitcoin at $86,939 and Ethereum at $1,905. The stability of these digital assets suggests that investors may be considering cryptocurrencies as potential hedges against fiat currency volatility and traditional market downturns. Ripple, the company behind XRP, has recently made significant moves that could influence the cryptocurrency's market dynamics. On April 1st, Ripple unlocked 1 billion XRP from escrow as part of its monthly scheduled releases. This practice, initiated in 2017, aims to provide transparency and predictability to the XRP supply. Typically, a portion of the released XRP is sold to fund operations and investments, while the remainder is returned to escrow. This month, Ripple locked 700 million XRP back into escrow, signaling a controlled approach to managing the cryptocurrency circulation. The interplay between Ripple's strategic decisions and the broader economic environment is crucial for XRP holders and potential investors. The introduction of new tariffs may disrupt traditional financial systems and cross-border transactions, areas where XRP's utility as a bridge currency could become increasingly valuable. Financial institutions seeking efficient and cost-effective solutions for international payments might find XRP's technology particularly appealing in mitigating the frictions introduced by trade barriers. However, it's essential to approach this landscape with a nuanced perspective. While the current market conditions highlight the potential advantages of cryptocurrencies, they also underscore the inherent volatility and regulatory uncertainties within the crypto space. Investors should conduct thorough research and consider their risk tolerance when evaluating the role of digital assets like XRP in their portfolios. Looking ahead, the global response to the U.S. tariffs will be a critical factor influencing economic stability. Countries affected by these measures may implement retaliatory tariffs, potentially escalating into a full-fledged trade war. Such developments could have profound implications for global supply chains, consumer prices, and overall economic growth. In this context, the adaptability and decentralized nature of cryptocurrencies may offer alternative avenues for value transfer and preservation. Moreover, the evolving regulatory landscape will play a significant role in shaping the future of cryptocurrencies. As governments and financial authorities respond to the rise of digital assets, the establishment of clear and supportive regulations could either facilitate or hinder the integration of cryptocurrencies into mainstream financial systems. For XRP, favorable regulatory developments could enhance its adoption among financial institutions, while restrictive policies might pose challenges. In conclusion, President Trump's announcement of new tariffs introduces a complex array of factors that could influence both traditional financial markets and the cryptocurrency ecosystem. For XRP and its stakeholders, these developments present both opportunities and challenges. Staying informed and agile will be essential as the situation unfolds, with a keen eye on how global trade policies and regulatory frameworks evolve in response to these unprecedented measures.